Thank you for tuning in to our podcast from the Darkhorse's mouth. Today's episode is episode number 4. Houston, we have a problem, carrier access. And today we have with us our co-pilot, Carly.
Hi.
And we have Gene Knippers from Ironpeak.
Glad to be here.
Thanks, Gene. Quick question for you, because I always have to ask. Love the mustache.
Well,
How long does it take to curl the mustache? Is that a pretty seamless process?
Curling the mustache is easy. You just get some wax, and that part is easy. But it's shaving and doing all that stuff. That's the hard part, the longest part in the morning.
You see, here you thought we were going to end on Ask Me Anything, but I started with it, and I started with something I didn't even think I was going to ask. So thanks for that clarification.
Absolutely.
And so Ironpeak, formerly named Iroquois, right?
Yes.
Talk to us a little bit about Ironpeak and who you are, your position in the marketplace, all that fun stuff.
Yeah, so Ironpeak, we've been around for 50 plus years. We started up in the northeast part of New York, and we're probably the very first aggregator.
Okay.
And so, the concept grew pretty quickly. I mean, back then, banks were getting into the acquisition of insurance agencies. Ironpeak, or formerly Iroquois, had actually started purchasing agencies, and then capital kind of dried up, because of banks. And so then the concept of networking with other agencies that had similar carriers, similar values, and really aggregating the volume to have a bigger voice with the carrier and for profit share, bigger payouts with the carriers and such. And so that's kind of the history of our company. And then most recently we rebranded to Ironpeak.
Got it.
Much easier to say.
Yeah.
And
or
easier to spell.
Yeah. So let me ask you a question. So it seems like a lot gets thrown into the aggregator bucket, right? So
Right.
there's the aggregators, and you had just said, Ironpeak, higher commissions, profit share, that type of things. But then you also have clusters,
Right.
networks,
Yep.
right? Would you consider those one and the same, or consider them different?
Network is kind of the new term for aggregator.
Okay.
Yeah.
They
Yeah,
softened
and
it.
then we like to consider Darkhorse a platform, right? And we focus on a lot of the back end support and whatnot. But you've got the aggregator piece, and then how would you define a cluster?
Yeah. So clusters would be independently owned agencies that have their own direct appointments, or parent codes with the carriers, and they just simply roll up their volume for profit share and bonuses and things like that. So they're not there's not like a parent code with a bunch of child codes or subcodes. It's just a compilation of agencies that just roll up together for
Got it. So
benefits.
for the most part, the goal is let's aggregate a lot of premium with the same carriers to maximize profit sharing and revenue.
Correct.
You talk about the child codes and subcodes, and the title is Houston, we have a problem with carrier access. It really all comes down to being able to access the carriers,
Right.
right? And so what's today's market, would you say that is challenging?
It's definitely challenging. Yeah.
We all laugh because we
It's
know.
it's a tough market.
Yeah, and so if you're a new agent coming into the market, what are the challenges with getting direct appointments versus maybe an appointment through someone like Ironpeak or someone through like Darkhorse?
Yeah, so one of the challenges, and just to kind of maybe back up a little bit, back in the 90s and the 2000s, that's really when networks, aggregators, clusters really began to gain speed and get traction in the marketplace. And carriers, for the most part, were in growth mode. They were always focused on growth. And so whenever you would stumble upon an agency that was part of a big group, it was like hitting the jackpot, because if you could sign up the group, then you could scale up. You could scale up your territory, and reps have always had new appointments as kind of an objective, and so it was an opportunity to, get your new appointment goal, hit, and carriers were. By and large, they were excited about networks and aggregators and just large groups, because they were in growth mode. They could scale up really quick, and then the honeymoon, I call it the honeymoon, was starting to
I
kind
call
of
it the
phase
glory
out.
days.
The glory days,
The glory
Yeah.
days.
yeah. But some of the challenges with the model was, carriers would oftentimes kind of give you carte blanche. You could just appoint everybody, right?
Mhm.
And so these networks and groups began to grow because they could bring on more agents. The carriers were kind of willing to just let them have carte blanche on new
hmm
appointments. And but over time, some of the groups, maybe appointed agents that shouldn't have been appointed with a particular carrier. Sometimes the carriers would not actually go out and visit the
hmm
individual agents, and so, getting the message down the pipeline was challenging. I know I've called on agents that thought a company was non-standard when that was the very opposite of what they were.
Yeah.
And so over time, you started to see, reps become a little disenchanted because they would call on somebody and that person wasn't as enthusiastic about the company as maybe, the master agent was.
Yeah.
And then, and really it came down to profitability. All of a sudden, the group started performing about 5 to 10 points difference between just regular retail agents. And so it was really kind of the latter 2000s that the carriers really started to kind of manage these groups, assign national reps, try to kind of rein them in a little
hmm
bit. And then most recently, we've been hit with inflation, and then things like third-party litigation funding, and
Yeah.
Yes.
that's hit our business quite hard, and so now you've got carriers that are not only concerned about profitability, but they're de-risking and looking to get off business and get out of states, and so
And you and even drop agencies,
and drop
right?
agencies.
Which before would very rarely happen, and now you hear of it happening semi-frequently. A decent sized agency loses their appointment, and now they got to scramble to pick up
Place
the
the
pieces.
business.
Right.
Yeah.
So you've got carriers de-risking, trying to manage the business they have in some of their challenge states, and when you have a model that's designed to get new appointments and new sources of revenue, makes it very difficult, because if the companies want to de-risk, they definitely don't want to appoint new agents.
Right.
Right.
So let me ask you this: agents that are looking to make a move from the captive world into the independent world. Obviously, you have a couple options, right? You can go get direct appointments. You can plug into a platform like Darkhorse or a network, or if you're at a certain level, join an aggregator to maximize profit share. Would you say it's easier or just as easy for them to get a direct appointment by themselves as it is for them to join part of some type of group, or do you think there's power in numbers?
Yeah, so it depends on the carrier. I mean, there's always been, like on the non-standard side, they typically don't have any requirements for new appointments. But I think it's not so much can I get the appointment, but as I look at the landscape today, and especially as carriers come out of this, challenge state, I mean, we are starting to see new appointments open back up, but the carriers are being very selective and cautious. And so it's not so much can I do this on my own, or can I get appointments directly? But in order to have, in my opinion, and I know I'm biased, but you want to have credibility with the carriers, and I think by joining a group that has a good reputation, you instantly can tap into either a VIP status with a
Right.
carrier, or a lot of times, the good networks, they vet their new members beforehand, and so if the network has a good reputation with the carrier,
They take some of the grunt work out of
it
what they would have
makes
to do.
it makes it easier. And at the end of the day, you want the carrier to want to do business with you. And the challenge with doing it on your own is there is an unknown. And if you make a mistake with a carrier, you may not get another carrier, or it could put you out of business, and that's difficult.
Well, the other thing too is you have to feed them.
Yeah.
Right. They don't just give you the appointment and say, okay, great, have fun. They say, where's my premium dollars?
That kind of brings me up something that I'm curious to know your thoughts on. A lot of new agents and agency owners come in and they want hundreds of carriers. In your opinion, do you think it's good to have a select few that you could feed, or to have the access to hundreds of carriers?
Yeah, so it's an excellent question. I think that you always want to have balance in an agency, and yes, you want to have some market variety. But one of the challenges that networks, aggregators, clusters have always faced with the carriers is, after the honeymoon was over in the beginning, when carriers were all excited about being able to scale up, one of the reasons they weren't as excited about it anymore was they would go call on somebody and the agent just didn't value the brand. It was like, this was just some company they assigned me to. You'll get it if you're cheap, and if you're not, you won't. And so, a lot of the reps became disgruntled, and they didn't want to call on these agents. And then they became kind of resentful towards the group. It's like, oh, it's just a bunch of little agents that don't care. So I think it's important to have a good mix of carriers, but our objective is, and we could have, we have a good menu of carriers, but we have a select few carriers and we stuff those carriers. And that's really where agents can build credibility with carriers, and develop a good reputation in their community, is by having a select few carriers and just maximize their benefits and abilities with those carriers. A funny story, when I was on the carrier side, I had called on this agent in Arkansas, and it was a great agency, and I was with a really good company, very well-known company. And I called on this agency. The owner was very nice. He brought me in, listened to my spiel. And then at the end, he said, look, you work for a really good company. I would love nothing more than to represent your company. But here's the deal. I've got X amount of dollars with companies A, B, and C. He showed me the plaques, and he said, I just don't have enough new business to feed those and feed you. And so I'm going to have to respectfully decline. And of course, at the time, I was disappointed and frustrated.
What?
But I always remembered that. And I thought to myself, I hope those carriers appreciate who they have in this agent, but he recognizes his bandwidth, and he's got his obligations, and he's sticking to them. So, and that's the danger that a lot of new agents that come into our space, especially if they come from a captive environment, they come to our space and they get all these companies, and it just becomes a rate game. And then they're just trying to, find a solution for a customer. and they never really develop, or build good solid books with carriers. It's 30,000 here, 40,000 there, and so to answer your question, it's prudent, I think, to have a good variety, but stuff those carriers, and at the same time you'll develop good partnerships with the reps.
Yeah.
And
Yeah, well, you see I mean, everyone gets hung up on 40 plus carriers,
math,
30 plus
yeah.
carriers, just like seeing it, right? It's like, oh my God, I have so many options. I'm gonna, I'm gonna, be able to, if I could only have another carrier, right? And then
yeah,
what you actually find out through experience, like even us included, like we've got 3 carriers that have like 60% of our business, on one side, and then on the other side, it's like, like maybe 5. So it's about 11, 11 insurance companies make up, not probably a little bit less than that, not including the general agents, but make up the vast majority of the premium volume
Right.
that we're writing. Now, do we have more carriers in the agency? Yes, because everyone gets all hung up on the
I have to have it.
on the shiny object.
Yes.
But
Right.
in reality, you need solid partners and you need stable partners,
Right.
right? Like the big names have stability. I like to call those the legacy carriers or the traditional carriers.
Right.
Then you've got the other ones to the market. I'd like to get your take on this, but the tech-based carriers, kind of the new fun ones that do a lot of tricks. But what's your view on? And usually those they're easier to access, right?
Right.
Yeah.
Right.
So what's your view on those?
Well, I think that we've seen kind of the insurtechs come into our space, and it's been good. I think it pushes some of the legacy carriers to get better. I think a lot of the tech-based companies, the kind of the end game is to get bought, and so it's not a long-term play. But in the interim, they do push some of the legacy carriers to get better, improve their own technology. In some cases, the legacy carriers end up acquiring them.
Right.
I think, at the end of the day, the challenge, much of what our business is involved in is litigation, claims, things like that. And so it's easy to say, oh, we have this new widget. It's easy to use. We
Yes.
can't believe that all the other widgets before this were so hard, all you got to do is this. But then, even like take a property company, for example. I mean, yeah, you may price for fires and water and things like that, but you don't necessarily think about, a tenant suing a landlord or,
Yeah, they
True.
focus on the tech, not the insurance.
Yeah.
Realizing that, like, hey, there's actually a promise you're making in the terms of claims, and you have to pay those. And when you don't have enough money to pay those, tech doesn't
Bye-bye.
mean much,
Right.
right?
Right. And I've seen different, flavors of
Mhm.
the tech companies. There's some really, really good ones, and I do appreciate the fact that they do push the legacy carriers to get better and to improve. But I've seen, I've seen carriers that come into the market and will write stuff that no one else will write, like dogs with bite history and
Yes.
pools with no fences, and you're thinking to yourself, like, okay, are you smarter than all of us, or are we smarter than and so
Well, I think that they don't necessarily know that they shouldn't be writing it. Like their underwriting is like at this level instead of the super granular level that the legacy carriers have through experience. And again, they're so focused on, a lot of the tech companies, of course, have startup money, and there's, they're obligated to generate revenue for the investors. And so it's, let's generate this revenue at all costs, and then we'll worry about the claims later. And then lo and behold, you've got a market where, like you were mentioning before, you've got inflation through the roof, and you've got, all of this other, climate change and disasters all at the same time. You get the perfect storm, and then they're looking back like, hold on, how'd that happen?
oh yeah, I mean, we were just starting to see some light in California,
Oh God.
and there were some carriers that were starting to open up, and then those fires came,
Yes.
and it's going to be closed for,
Oh, you think it pushed that off for quite a bit longer?
absolutely. I mean, talking to a carrier about writing personal lines in Southern California right now is just not the right time. and
Yeah,
try
there's like
too
there's no
soon.
water in the fire hydrants.
Yeah.
You
Yeah.
know,
Yeah.
so now beyond the actual wildfire, you get into maybe an infrastructure concern or question. I'm sure the carriers are like,
Yeah, we're
we
out.
need to figure some stuff out before we do that, which is troublesome.
Right. Absolutely. Which, also leads to agents being able to pivot and be able to do commercial as well. I know
That's a
we've
great segue,
Yes.
Gene.
yeah.
Look
You know,
at
we've
that.
got a lot. That was one of my questions. We've got, I put marketing out there. Obviously, the market has been frustrating for everyone. Even someone at the level of Darkhorse and then Ironpeak, which is, of course, you guys have been around 50 years. You're at your whole own level, and it's been a lot for everyone. And I finally got to the point. Obviously, agents typically they know personal lines.
Right.
That's kind of their first go-to is personal lines. And then now you get in a market to where I think that the personal lines appointments are harder to get than the commercial appointments in a lot of
Yeah.
cases. Would you agree with that?
Absolutely.
Yeah. So you get in this market where like, this is all I know, but what used to be the coveted appointment, which was the commercial appointment, is now the
Right.
easier one to get.
Yes.
And it's like, how do I make this transition? So I put a bunch of marketing out there. It says personal lines is dead right commercial. I don't know if
Right.
that's good marketing or not, but that's the way that I feel about it. And I agree with the focus on shifting to commercial because there still is a lot of opportunity there. So talk to us a little bit about, obviously the personal market is super challenging right now. And it sounds like California just is going to continue for a little bit longer, but talk to us a little bit about how you see the commercial opportunity and how the opportunity looks broader than the personal line side.
Yeah, on the commercial side, we just haven't seen, the challenges that personal lines has seen. Obviously, they're two separate segments altogether, but on the commercial side, the market just hasn't been as hard. Right now, take workers' comp for example. I mean, we're kind of at a season where carriers are really doing well profitability wise in workers' comp. I mean, every
Yes,
company
they all want it.
they all want it.
Yes.
I mean, they're paying for it and they'll pay more for it. And so even in some of the what we call challenged states, your California, Texas, Florida, the commercial carriers are by and large still open for business.
Yeah.
And so it does become, incumbent upon an agent to be able to kind of pivot a little bit and be able to serve, two different sets of customers.
Mm-hmm.
And so, especially with personal lines, drying up. And at the same time, it allows the agency to kind of get credibility with the carriers. I still see large commercial agencies that it's easy for them to get a personal lines appointment if they've already established a good commercial book with a carrier, even if it's like two separate appointments, the introductions will
well,
get
the
made.
profit margin on personal lines, which is part of the problem, is so thin. And it's
Right.
thin across the board, right? And in commercial lines, of course, there's small commercial and whatnot. But, you start getting into the bigger, funner stuff, like the profit margin's there.
Right.
So maintaining profitability is typically easier. And the carriers are like, yeah, you're bringing me this. Sure, I'll cut you off this little piece just to, satisfy your customers and solidify our relationship, basically.
The other, kind of thing that we've noticed as well is commercial agencies, like our business, we're 65, almost 70% commercial, which is very different for most networks.
Right.
They're
Yes.
the very opposite. And that was very strategic. Early on, the company wanted to, make sure that we had commercial agencies or agents that had commercial capabilities. They found that they tended to be better agents. They were more educated in the insurance world. They were the agents that subscribed to the, leading journals and things like
Mhm.
that. And it was easy for them to transition to personal lines. And,
Right.
they were already very professional. So I think it will also give agents credibility with carriers when they do commercial, because they do become more knowledgeable in the insurance space
Yeah, I'd
in
agree with
general.
that. And they can always still, write the personal lines is an easy thing to write once you've done all the commercial. And we're in the same boat. I think 80% of our revenue is now commercial driven. It's just the sales and service cost is so much lower and the premiums are so much higher that the profit to allow you to grow and scale is really exponential. And then you get into the we haven't really talked a lot about this a lot, but even in well, especially in states like California, Florida, and Texas, you've got your excess and surplus lines markets.
Right.
So everything that the admitted carriers don't necessarily want to write, well, you still have a home for it.
Absolutely. And that business has exploded as well. I mean, there's been, we have a hard market. I mean, we've been through a hard market on the personal side. We have experience a little bit on the commercial side, not as much as personal, but on the commercial side, there have been a lot of carriers that, got out of certain lines of business, habitation, is one, convenience stores, things like that. And so, we've seen just this, huge share of the market go to the E&S space. And it's been interesting. I mean, I know, one of the biggest complaints that agents have about E&S is just the time it takes to get quotes back and things. But
yes, that's
but
what I
it's,
hear all the time.
I can only imagine they're just slammed. They're so busy.
Yeah.
And that's the other thing is I know of several E&S markets that if you are part of a network, your stuff goes to the top of the pile.
Oh,
yeah.
See?
Yep. We've got relationships like that, which is great. And because you're right, they're so inundated and, they're so inundated with submissions. They need like the 3 real submissions out of the 10 that they have. And when they have that relationship in place, they know that, hey, these are going to be legitimate. And the other thing too about the excess and surplus lines markets is once you it's a different process, the online stuff is kind of what everyone's used to, but once you know how to actually put a submission together, it's the same wherever you go. So you put it together, you submit it to your chosen E&S carriers, and they do the shopping for you with all of the other insurance companies that even as a retail insurance broker you don't have access to. You have to work through those intermediaries to get to these other carriers.
Yeah, I mean it's and kind of going back to the value of networks, it sets an agency up for success. I mean, when I think about, especially now we're having to, navigate certain carriers and you got to know what to say, when to approach them, things like that. And that's where, a group like Darkhorse can be an advocate for the agent and help them, because the worst thing they could do is, come to you. Can you help me with this problem? You reach out to a carrier and then they say, oh, that guy already reached out to me. It makes it very challenging from the very beginning. And so I know a lot of what I do is coach agents on, here's how to put a submission together, not necessarily like how to put a submission together, but here's what to put on it.
Here's what to say and not to say.
Yes.
Which can be important because they're looking for that one word. They're like, don't say it.
Yes.
Yeah.
Or actually maybe they're like, please say it. And then as soon as you say it, you're done.
Or even when to approach a carrier.
Yeah.
I've had agents ask me about certain carriers and, knowing what's going on with that particular market, I've been able to say, okay, now's not the time. Let's wait a month or two, or I'll let you know when the right time is. And so and again, that just, it gives the agent credibility because they're not, these carriers have been hounded by thousands of agents that have promised him the world. I know I know all these agents are telling you this, but my situation's different. I'm the, I work with the number one mortgage company in the world, and I can do it better than everybody else. They've all heard that,
We're laughing.
Yeah.
and it falls on deaf ears,
Yeah.
and most of the time it's because the carrier just isn't in appointment mode,
Yeah, they're not, if they're losing money, getting more business means they're losing
More
more
money.
money.
Right.
They want to get to a place to where they're eating again, and that kind of brings me on to my next point. Like, my initial thought is, when does the market shift back? I was viewing 2025 as a transition year where we're going to start rocking again in 2026. But then, of course, you've got the unprecedented wildfires, which of course affect California, but they're all getting hammered by the same reinsurance. Same reinsurance companies that are
Right.
reinsuring all these big carriers are paying losses,
Right.
right? And so how do you see that impacting? Let's take them in two separate pieces. We've got personal lines and commercial lines. What do you see the timeline like for returning back to a place to where the carriers are begging
us.
begging us for business
Yeah.
or to bring them agents and things of that nature?
Yeah. So, believe it or not, I mean, it's happening now.
Yeah.
A lot of the carriers took profitability actions over the last couple of years, and many of them did return to profitability. I mean, they, some of the national brands that we all represent had profitable years last year, but now they're kind of cautiously opening back up, and so there will come a day. Well, believe it or not, this business is in cycles, and I
Mhm.
remember, take auto for example. I remember when and you do too. The carriers wanted property. They didn't want as much auto, and now we're seeing some carriers that say, "Hey, we want all the auto you can send us. We're not." We'll do property, but only if it's packaged.
Mhm.
So it is interesting how this stuff, kind of comes in cycles. But I would say, a lot of the carriers have this motto, thrive in 25,
Yeah.
right?
Hey, I like that motto.
I do.
I'm going to use
we need
that.
T-shirts.
I know,
Thrive
thrive
in
in 25. And so I would say that, by 26, they're going to be, actively, begging for business again. I mean, they're already, begging for certain lines of business now.
Right.
But I think we'll be back in.
Yeah,
that,
I mean,
that
we've
pro-growth
seen
mode.
that on our end too. It just, again, California is a big market for anyone, right? And you're just, personal lines, it's like, go turn it on, let me start writing there, and then the floodgates open, and of course, that's probably pushed off another couple years. Are there any other states? Obviously, California is what I like to call, like, from personal lines. You can get, you can still go to E&S there. There's certain markets you can still get there. But it's, somewhat of a no-fly zone as it relates to personal lines. Are there any other states, personal lines related, that you're like, okay, it's just those are some of the most challenging states?
Yeah, obviously, New York
Yeah.
is challenged. Florida is challenged. Georgia is challenged. Texas, and it's for different reasons. Like there's parts of Texas that it's property driven. They just simply inflation, which for a homeowner is good. Their homes have increased in value dramatically, but insurance hasn't kept up with that. And so, and the carriers can't really get rate quick enough, and they can't put their inflation guard quick enough to, and so when a catastrophe does happen, they are paying, $500,000 for a house that's only insured for $200,000. I mean,
Right.
it's just been tough. And then you get into other areas, some of the metro areas, and it's more auto driven,
Mm-hmm.
and you have, just that proliferation of like PI attorneys and just that whole, I mean, even here in Arizona, when I'd go to Vegas, you would see billboards.
Mhm.
I mean, it was,
Yeah, and those so I've come to learn that in the liability space, there's, I think you call it third party funding,
right.
right? Where you actually get other countries, other hedge funds that actually dump money into the legal system, into these personal injury attorneys to actually fund it, and they get a return on their money.
Exactly.
which is
Wow.
insane.
I mean,
Yeah.
when a single attorney can be everywhere, on a bus, on a billboard, under your bed, I mean, they're everywhere. You got to wonder, like, okay, where's this coming from? And so it's, so the carriers are going to open back up,
hmm
and they're going to be back in that, begging for business mode. But I think it's going to be a little bit different. I know that, sometimes non-resident appointments are going to be kind of looked at a little more with scrutiny.
Yeah.
I know that was one of the lowest hanging fruit areas that they were able to stop the flow of business, was just, stop non-resident business coming in. So I think that they'll be back in growth mode, but they will, definitely vet agents better, and make sure that, it's an agent they would appoint, irrespective of if they're a member of a group.
Yeah, they're
Yeah.
not so much just handing out codes to hand out codes before, because now those codes have an expense to them.
Yes.
And when you're losing money and you're looking at all those expenses, it's like, okay, we want someone that's active in the marketplace,
Right.
and just, we don't need to blanket appoint anyone or everyone, especially with these traditional legacy-based carriers.
Yeah, I mean, we're seeing, carriers, what's the best way to put this? The way they're managing their business and their sales teams is more, um, like every territory manager has a goal or has a plan, and then now they're carrying that plan to agents, and not that carriers, this is anything new, they just started planning. But I remember as a young rep, I really didn't sit down and plan with agents. I just called on agents
Mhm.
Yes.
and asked for business, and brought them donuts and took them golfing, and that was kind of how we got business. It was relationship driven. But now we're seeing, like, territory managers actually sit down and, okay, I've got a goal for you. This is your plan.
Business plan.
And we're going to talk about this every month. And if you don't
So
want to
yeah,
talk
so
about
they're
it,
they're a little bit, well, not a little bit, they're definitely more diligent.
yes, yeah,
And it seems like what I've seen is they're having you establish credibility in your resident state. And if you put enough premium within that state or enough policies, then they'll open up another state for you. But you have to
right.
prove yourself. Is that accurate?
Yeah.
What I've been seeing?
Yeah.
Mhm.
It's like Missouri. It's the show me state.
Yeah.
Um,
So what are the personal lines? What are the most preferential states, the easiest states to write business in? A
well,
handful of-
Arizona's always been an easy state because of the regulatory environment. It's
Mhm.
always been really easy. It's, we jokingly call it a use and file state. And so, if you're a carrier and you have a rate revision, you can start using that set of rates and then file it,
Mhm.
and then, make adjustments based on whenever it gets approved. Other states are challenged, like California, where,
Mhm. Yeah, the Department of Insurance climate.
yeah, very, very, very difficult. But easy states are generally going to be like Arizona, New Mexico, Idaho, Montana. Um, even Kansas and Oklahoma have historically been pretty good states to do business in. But even though they get tornadoes and things like that, they're pretty good states.
Yeah,
And, the cost of insurance is higher. And so they're getting
that's
more
true.
premium.
That's true.
And so I think, that's another, nuance to Arizona's. I remember first moving here, having lived in other states where homeowners insurance was, $1,000, $2,000. And then I move here and it's $300
Yeah.
or $400, back when I moved here.
I remember that.
So it's,
People get mad that their rate went up 10%.
yeah,
Yes.
It's $3 or $30.
yeah. But I would say, The Southwest states,
Yeah.
by and large,
Okay.
are going to be easy states.
And so shifting over to, of course, commercial, which it certainly hasn't gotten as challenging as the personal lines market. As we talked before, it's just a more profitable as a whole, and so there's more opportunities. How do you see that market compared to the personal lines market? I know that it's thriving 25 and then 26. Hopefully, all bets are off. Where would you place commercial in that mix?
Well, commercial, we just really haven't seen inflation. I mean, it has hit in terms of like the cost of goods and things like that, but it's just been a much easier path
Mm-hmm.
in terms of getting appointments, writing business. The carriers have just been profitable, and our business is it's not rocket science. I mean, if a company is doing very well in workers' comp, as we've all seen, that's all they want.
Right.
And we just kind of, and being able to pivot to go down in, work in that space.
I love it when the carriers pivot, especially when you specialize in something and all of
Yeah.
a sudden they're like, yeah, I don't want that anymore. Where's our workers' comp? And I'd be like,
Yeah.
I don't write workers' comp.
Yeah.
And then you
Specialize in that.
have to build a marketing plan and create it. And then by the time you do,
They've
they
shifted.
Yeah.
shift again.
I think it's good to be balanced,
Mhm.
as an agent. There's nothing wrong with being a personal lines agent. It's just like everything else with your agency. It's having maybe 70% of your business with a handful of companies, and then supplementing the rest with maybe some other companies, and then maybe if you're a personal lines agent, having at least 70% of your business in personal lines, and then supplementing that with commercial, and that way you're not totally caught off. First of all, it's more healthy as the agency. It makes the agency worth
As
more.
you have a hedge.
Yes.
Yeah, and I've seen agents really go out of business, just because they, had everything in one vertical, and when that vertical dries up,
Yes.
they dry up.
Reminds me of health insurance a long time ago.
Yeah.
When it was individual health insurance, apparently you can make money doing it again. But I left it in the idea of writing it back in like 2008. When the whole marketplace and all that kicked off, pretty much decimated anyone with a health insurance book. Or at least that was my view of it. And if you only have one option, or you don't have a hedge, and you get into a market like this, which they do come around, right?
Right.
And then you find yourself in trouble, and you're working backwards.
Yeah. Or you need to shift accordingly, like we've done multiple times.
Yeah. So, anything else as it relates to carrier access that you want to cover?
I think it's just, I think as agents, kind of going back to what we talked about earlier, it's not so much just can I get the appointment, but it's positioning yourself for long-term success, partnering with somebody that can help you navigate these waters, because approaching carriers for appointments, if it's not the right time, could sour the taste of, from their perspective of getting that appointment in the future.
Mhm.
Right. And so, I mean, I've had agents come to me and ask me about particular carriers, hey, can I get appointed with this company? I heard they write XYZ. Well, I know that company is actually phasing out of that line of business, and so, so it not only saves them time, but they, don't look crazy when they, call a carrier and
Tell
say,
them that they're going to write all this business that the carrier doesn't want to
yeah,
write.
yeah, and I've seen that happen,
Yeah.
where they say, hey, I can write, I can send you all the hab you want, and it's like, okay, you just burn that bridge forever. They don't want that,
Yeah, you have to wait for the marketing rep to take a job somewhere else.
Yeah, yeah.
Call them back in 3 years.
Oh, geez.
But in terms of engaging with getting appointments and things, I think it will be very incumbent upon agents to engage with the carriers. That's like the big buzzword for carriers is engagement. When they call somebody and want to schedule an appointment, I mean, I like visiting with, I get so many emails. You do too. You do too. And it's like, I can sit down with somebody in 45 minutes, get the rundown on what's going on with their company and save myself from reading a bunch of emails. So, and it builds a relationship with the company. But I think it's critical for the agents to view the carriers as partners, not as vendors.
Right.
And that was one of the downfalls of the network or aggregator. I don't want to say system, but the respect that carriers had for groups like us was because a lot of the sub agents really treated the reps and the companies like vendors.
Yeah.
Yes.
Yeah, that makes a lot of sense. And they didn't take care of them. And at the end of the day, it's a relationship based business.
Right.
And that was actually one of the things that was very evident when I, came from the captive world to the independent world. When I was in the captive world and I was their only option, I felt like the insurance company treated me as a vendor. Right. And then
Right.
I get into the independent world and it's one of me and all these carriers, wanting my business. And then all of a sudden I felt, I was like, oh, here's the partnership at not you have to write, 30 life policies or whatever it was. It's like, hey, what do you want to write? What do you have to offer? And it's a true partnership. So it's interesting that, you put it like that, where, if the aggregators, networks, platforms, whatever, or the agents start treating the insurance companies like a vendor, which is the way I felt, like no one's going to win in that game.
Right. And so, I mean, when the reps feel valued and I know, sometimes, agents will, oh, it's just the marketing rep, they kind of dismiss them, but a rep can make or break you. I mean, they really can. And, just like with any business, they'll have regional meetings, quarterly updates with their senior management team. And if they like you, and if there's ever an issue or something comes up, it's always good to have a great relationship with that rep that they can stand up in a meeting and say, no, this is a really good agent. This is a fluke. This is this. But if it's a challenging agent and there's anything that goes wrong, and I've been in these meetings where, maybe the loss ratio is high and, then all of a sudden the rep stands up and says, yeah, and they're difficult to make appointments with and they never want to see me and they do,
Yeah.
It can cause the relationship
Well,
to
then
go
that,
south.
and then you as the agent or agency starts getting a reputation,
Right.
Yes.
and you don't want a bad reputation in what is really a close knit market space.
Exactly. And not only that, you can develop a bad reputation with the company. I've been in meetings where it wasn't just myself and the sales, team or sales execs, but underwriting, it's all of a sudden an agent's reputation permeated a company.
Wow.
And especially if it was a small company,
Mm-hmm.
because then it was like now underwriting anything that comes in from that agency is looked on with, oh, this agent's trying to steal from us or whatnot,
Right.
So I've seen agents unknowingly develop bad reputations within carriers. It started out based on how they treated the rep, and then it just kind of snowballed from there.
Got it.
I never thought of the behind the scenes of the reps. I mean, I love all of our reps that we work with and we have really strong relationships, but I guess I never really took into consideration the flip side. So thanks for bringing that up.
Yeah.
Because that is huge for even the listeners to understand that.
Well, they can really go to bat for you,
Yeah.
or they cannot.
Yes.
Right.
Well, and I mean, that makes sense.
And you don't want to be, especially, if, like us, we've grown pretty rapidly and we're not just one person, you get people coming into the organization. You're never going to bat 1,000 and have, 100 good people. You're always going to have one or two that, maybe are brought on are a little bit questionable, do something they shouldn't. And, you want to have that relationship with the carrier and the marketing rep to say, hold on, wait a second, let's look
This
at
is a fluke.
let's
Right.
look at the bigger picture, or at least be able to have a conversation with the agency owner, someone like myself, like, hey, let's get this thing taken care of and knocked out, and put some controls in place. So
Yeah. I think communication is key. I know that's kind of cliche, but engaging with the company, engaging with the reps. I mean, at the end of the day, you want the carrier to want to do business with you, And I know, like, oftentimes, the way we operate, the way I operate is, not that this is the case, but I do my best to present myself in such a fashion that I want the carriers to think of me as like their favorite person to do business with. Whenever they have, something new that they're, out promoting, that they get buy-in from me, and that, it makes their life better because they're out talking about whatever the initiative is, could be, whatever,
Jet
telematics,
skis.
Yes.
that
Telematics.
that's been the, flavor lately. But they get enough pushback from agents that when somebody does embrace it, or, or at least is positive about it, it makes a difference in the relationship. They enjoy doing business with you. And so,
which is important because we're a relationship-based business.
Yep,
right.
you're absolutely
Absolutely.
right.
Yeah.
So in closing, we always like to end it on a segment called Ask Me Anything. And I don't know if you had come up with a question or not. If you didn't, that's okay. But if you did, I'll do my best to answer it.
Well, what do you do in your spare time? That's, I guess,
Oh,
you're
man.
always working
Yeah.
all the
Is.
time. And
Yeah.
so I kind of wonder, what does Dan do in his spare time?
I work a lot. I do. But in my spare time, I work out, lift weights. I actually play video games. So I'm avid PC gamer. I play a little bit of like PlayStation 5 and that. My son is he's into it, so it kind of works out well that way because I don't get to devote the 15 hours a day that he does. But I'll sit there and spend an hour and a half. Other than that, into movies, going out, nice restaurants, stuff like that. But predominantly my schedule is
Work.
I'll wake up, I'll work out, I'll wake up and then work out, and then I'll work until 5 o'clock, go home, eat, watch 15 minutes of TV, and then work till somewhere between 10 p.m. and midnight. And I do that Monday, Tuesday, and then Wednesday, Thursday, I have my son, and so same schedule, but then when he gets home, hops on his video games, which is right over here in my home office, and I hop on my computer, which is right over there, and then I continue working. And so I do that pretty much like 5-6 days a week, and then I have fun in pockets. But working for me is fun. So
He loves work.
I love working.
I
I love
do too.
building.
I do too.
I love I love the building process. I'd probably call it I always say it's my creative process. I can't, I don't paint artwork, but I build companies and I happen to be good at it and I just love doing it. So
Good.
That's awesome.
thank you for tuning into our podcast from the Darkhorse's mouth. If you want to learn more about us, go to darkhorseinsurance.com.
And follow us on Facebook, Instagram, and LinkedIn at Darkhorse Insurance Brokers. And email any questions to podcast@darkhorseinsurance.com. Thank you.